You saw me buy yesterday 13,000 US dollars of Bitmine long-term options. And why I did this instead of the usual buying the stock only, all about this here in this video. And we will talk also Tom Lee talking about the huge innovation in Wall Street. And this video is so much packed with information that you shouldn't miss that at all.
Welcome to the game, I'm the Wolf of Dubai.
Welcome to a brand new vlog, and if you are new to this channel, my name is Danny and I'm looking for stocks that can go up 10, 20, 30, 40, 50x. I was very early on Tesla. If you watch my very first videos, I looked much younger because this was like 6 years ago. I said you need to look into Tesla, guys. Okay, Tesla is a huge company. By then it was a $20 billion company, guys. Now it's over $1 trillion company, and the stock went from 17 when I put my life savings into, and I averaged down to 6, and the rest is history. Now more close to $400, $500 per share. It's absolutely insane. It not only changed my life, but also the life of many of my subscribers. As you can see here or here, they bought houses and apartments because of my videos. So you should be subscribed if you're watching this on YouTube on both of my channels. And you should also follow me on X if you are watching that on X. Now, I also never advertise any other product here. I only advertise extenddaytrading.com because this is my own product that I created over the last 3.5 years, and it's allowing us professional day traders to send you all the trades that we do on the US stock market all automatically into your portfolio. This week, for example, we made 4 trades, all were positive, and today we just made a fantastic trade on Las Vegas Sands that had great earnings, and we banked like 34% profits, all done for you. We send the trade, we close the trade, all inside your portfolio. We want to average about like 8 to 15% per month. So if you start with $10,000, you should be somewhere around like $58,000 in the first year. We have very limited spaces every month before we raising our joining fee. So if you go on extenddaytrading.com, if you have $10,000 or more, schedule a call with me and we see if we can help you as well and grow your portfolio all automatically done for you in your account. So make sure to check it out. Now, yesterday, or if you follow me for a longer time, you know I'm buying between like $3,000 to $20,000 worth of Bitmine every single day. Okay, sometimes I skip it, then the next day is a little bit larger whatsoever, right? So, but yesterday I had $13,000 that I wanted to deploy. Now, it was the very first time that I said, I think I will put some into longer term options in Bitmine. Okay, instead of the stocks, I bought the 47 call strike expiring mid of January. All right, as you can see from the screenshots here, I bought it yesterday, so I'm a little bit up already, but I think that it could be up tremendously. And what is the best way to look into that? To take a professional calculator where I see the option being going, right? Obviously, most of the money, and I'm trying to get to $10 million worth of Bitmine over the next couple of months and years. But I think that when you take options a little bit more in a safer way and you benefit from the volatility on October, and then you have like a great months November and December. Think about it, the catalysts are there that the stock market has great seasonality. The bad news is baked in that there's Trump and President Xi it's not agreeing on something, but actually I think they will meet, and I think all of that is all a nothing burger because also Trump wants to have the stock market at all-time highs at the end of the year. So I think that everything will play out. The crypto as well as the stock market will have all-time highs, and I personally see the Bitmine shares in the very bull case at $250 and a very, very base case at $100. So between $100 and $250, I bought the $47 strike. I paid around like $11 for it, so my break even would be 47 plus 11, that would be 58. So if until mid of January we just cross all over 58, all of that will be pure profit. And we have seen over the last couple of weeks, we easily always touch like 65 areas. So I think it's a pretty good bet if you want just to extend your gains on Bitmine over the next couple of weeks. Okay, this is what I'm doing. This is never financial advice. Options can also go to zero, right? If we have like a flat BMNR or a decreasing BMNR, I will still continue to buy every single day, but mostly stocks. Okay, so that's just a small explanation to what I did yesterday. And let's dive in how that trade actually could look like in a couple of days. Profitcalculator.com. If you just put it in Google, you will find this. This is a very cool site where you can go to, for example, go a long call calculator. You type in BMNR, you get the price. Then you go to I want to buy or bought, and then you check the options that you want to see. I want, for example, the expiry 16th of January and the 47 ones. Okay, so here you have the bid, a medium, and ask price. So let's go for the mid price. And then I bought yesterday, I think 11 options. Okay, so, and then you can say, okay, I want to know how my option will develop if the price will go from 35 to 250. Okay, then you get calculated, and then you get this kind of presentation. Here's a great example. So you can see here you have the Bitmine prices, and let's say if by January expiry date, that's actually the most important one. Okay, so here obviously it's nicer and more profit once it happens earlier. Here you have the dates, but here, for example, I look at something like this. So I say, okay, if Bitmine will reach $100, then I should be somewhere around like $42,000 in profits, right? With my 13, like around like 300 to 400%. This is what I would love to see. The break even somewhere is, as you can see here, around like 56 to 63. The actual break even is obviously the $47, the strike price, plus what I paid, right? So that would be 58. But everything over there, even when we just go to $70, I should make $12,000 on that options, right? And obviously I want to see something more of 250, then I would make like $200,000 in profit. But let's see if this happens maybe somewhere in the middle, somewhere around like, let's say 150, then I should still make $100,000 in profit with a 700% increase in value. So I hope that gives you a little bit more insight about options and how to, buy very safe options that are a little bit more further away, and how to calculate the profits. And let's dive in now to the next part of this vlog. So now let's dive into Tom Lee. Tom Lee has a new presentation that he prepared for us, and I would love to directly dive into it because he thinks that Wall Street will change totally.
And in fact, 7 of the top 30 largest companies in the world are banks, including JP Morgan, Visa, MasterCard, B of A, etc. Okay, well, in 2025, which is 2 generations later, it's not just the dollar that's becoming synthetic. Everything is going to become synthetic. Let me explain that. The first is the Genius Act, which is what Congress passed earlier this year, which creates the stage for a stablecoin boom. And then the SEC announced Project Crypto, which is encouraging Wall Street to move on to the blockchain. Remember, the blockchain is a public software, basically gigantic public software, but what it does is it verifies transactions and it stores records and information, and it eliminates a lot of the costs and friction that Wall Street experiences today. In fact, Treasury Secretary Bessent believes that just the stablecoin market could be $3.7 trillion compared to $250 billion today. That's exponential growth as we start to see Wall Street move things synthetically onto the blockchain. So what does that mean? Well, if everything's becoming digital, okay, you've heard a lot of people say, well, you want to find the digital store of value, the digital gold, which is Bitcoin. And that makes a lot of sense. That's what Fundstrat has been advocating for since 2017. That was more than 8 years ago. And in fact, Tireless Ken remembers when we first started writing about Bitcoin in 2017 and we said it would be institutionally adopted as digital gold, people ridiculed us. We lost a lot of customers actually because they thought we really lost our grounding to reality. But as you know, 8 years later, that's the narrative. Bitcoin is digital gold. Well, let's think about the next 10 to 15 years. Wall Street's going to build a market for digital assets. Now, for reasons I won't cover here, it's going to be on Ethereum because that's really where everyone is building this future. But the thing I want to highlight today is that Wall Street is going to build a market for digital assets onto the blockchain. So it's more than just dollars, it's everything. So think about this. There's two story arcs that are going to be the next 10 to 15 years why I think it's the biggest macro trade. The first is stablecoins, the upward one. Stablecoins, we're going to tokenize stocks. NASDAQ actually just approved that this week. We're going to tokenize credit, tokenize real estate. Maybe we'll monetize our reputations on the blockchain so we can value that. And we'll monetize intellectual property, which, as you know, is the largest component of CapEx today. So if you look at GDP data from BEA and you look at what they call private investment spending, the largest share of that is intellectual property. That is easily moved onto the blockchain. But then there's another story arc. If you're going to be able to digitize that information, you're going to monetize data collection, royalty streams, loyalty programs. As you know, that's a huge business, is the value of your frequent flyer miles. Then there's going to be agentic AI and things like proof of humanity. So that all is what you're going to see in the next 10 to 15 years. This is the biggest opportunity for Wall Street ever.
So he believes that what happened to the US dollar will happen also for Ethereum, that everything will be tokenized, same like the Wall Street had the huge innovation of being, let's say, the US dollar being like a synthetic, okay? So I think that this is very interesting because when you have a very, very strong opinion about it, like Tom Lee has, he thinks that Bitmine could be the next kind of bank or something like that, okay? Think about it. Everybody is tokenizing everything. They are all using Ethereum and Bitmine will be the biggest holder of Ethereum, okay? So this will be quite interesting play what they have now cooking with Bitmine, and that's why he's showing us banks are actually some of the most valuable companies in the whole world, and this is actually telling us through, the bushes to say like, hey, Bitmine will be the next generation of bank, and that's why it will be, one of the top 30, maybe top 10 company in the whole world. Before we going into the second clip, make sure to check out xtendaytrading.com if you want us to trade for you, and I really looking forward to trade for you. Today we did great. Last week we did great. We have like many profitable weeks after each other. This is how I want your portfolio to grow. This is how our software looks like, so you can see that I'm super happy to do that for you. And if you have $10,000 or more and you want us to trade for you, check out xtendaytrading.com and schedule a call on our website. Now, also the next clip is quite interesting, what Tom Lee says.
Okay, so that gets me to the last point, and I believe there'll be time for questions too, which is I've given you 5 reasons to be bullish on stocks, but yet this is the most hated rally ever. And I believe I know the reason. I'm going to explain it, but don't get angry at me if that's the reason, okay? First, it is, in our view, the most hated V-shaped rally because at Fundstrat, we survey people, we ask them how they're positioned, what they think of multiples. This is not we get cautious sentiment and skepticism. That's not what you expect at the top, and that's healthy. If people are skeptical at the top, that means there's still plenty of room for stocks to go up. And we can see it numerically. I like this survey. This is the AAII Bulls Less Bears. It's currently negative 10.7. That means there's more bearish people than bullish people. And in fact, for the last 5 weeks, as the market's made all-time highs, the net bulls is bearish. Do you see it? Minus 11. We've had 5 weeks while the market's made all-time highs and everyone's skeptical. In fact, this is from Tireless Ken, you looked at all the times the market had a 25% or more rally, and I put a red dot. Usually sentiment's quite bullish by the time you had a 30% rally. We've had a 34% rally, and yet the average sentiment is still negative. That tells me, first of all, that most people went to cash in April. They didn't think we'd recover, and I don't blame you, because I remembered at the April lows, we heard a lot of people tell us, Tom, there's no way we can recover because the Fed's not going to cut rates or expand the balance sheet, so you don't have any liquidity coming. Our argument was that waterfall declines always see reciprocal recoveries. Okay, but I believe the reason people are bearish is because of political affiliation. So please do not judge me. I'm registered independent, but I want to point out some facts. I am a registered independent, and I didn't vote for either candidate in this last election. But if you look at the general population, the U.S. is 50-50 roughly between Democratic affiliated and Republican. Okay, so it should be half. But if you look at the University of Michigan survey respondents, and they published the affiliation, 60% of the people that respond to the UMich survey are Democrats. So when you see UMich inflation and confidence, just remember it's skewed because more people who respond are Democrats. The media, we know political affiliation is 89% Democratic. And we know that if you look at contributions by Federal Reserve employees, 92% donated to the Democratic Party. Okay, so as we run that down again, half the United States is Democratic, half is Republican. But media and the Federal Reserve skew Democratic. Well, look at the equity market. 57% of employees in the stock business are Democratic, 67% of hedge funds, and 69% of venture capital. Okay, so the equity world, or the risk-taking world, leans Democratic, which is the opposite of who's in the White House today. Whereas the bond market, 83% of those who work at savings and loans are Republican. Mortgage bankers, 64%, and commercial banks, 60%. So the bond market leans Republican. That might explain something to me, because if you ask me in 2025, why did we not get bearish? It's because the high yield market barely reacted to the tariff headlines. Spreads didn't blow out. So we figured, well, if the bond market says the economy's fine, stocks should recover. So I think the reason why you might be bearish, or your friends might be bearish, is that the stock market is primarily Democratic and they think Trump is crazy, whereas the bond market leans Republican and thinks everything's fine. I believe this is the reason it's the most hated V-shaped rally. And so I got a few closing points. Well, first, I just want to show you the survey. I mean, look at the UMich survey. The UMich survey, if you ask about inflation, Democrats respondents say inflation's 6%. 2 months ago, they said it was 9%. Republicans say it's 1%. So you can see there's a huge political divide. I mean, unless they shop at different stores. Okay, so this is how we want to be positioned. First, we like AI and crypto. So that means Mag 7, Bitcoin, and Ethereum. But we also like industrials, financials, and small caps because that's a play on the dovish Fed. And the last set of points here is more just a reminder. The first is you have to remember the rule of 10 best days. I know there's going to be a lot of folks here who are really good at market timing. I'm not one of those. Okay, but here's the thing. Since 1928, the S&P has returned 8% a year. That's the first row. But if you missed out the 10 best days in the S&P out of the 220 trading days, your return is negative 13%. Think about that. If you missed out just on the 10 best days in the S&P, in every year, you had negative 21%, negative 13%. Since 2015, that's still true. The S&P's returned 12% a year. But if you miss the 10 best days in the S&P in 2015, since 2015, every year, you had a negative 10% return. Let me just put this in numbers for you. In 2023, the S&P was up 24%. If you missed the 10 best days, your return was only 4% in 2023. In 2024, the S&P was up 23%. If you miss the 10 best days, your return is only 4%. So you get our point. You missed out on most of the gains if you sit out the 10 best days, which is why we don't want you to time the market.
He is explaining in this clip that, first of all, market timing is very, very hard. It's impossible, okay? So it's impossible to really time the market perfectly. So that's why I always say as well, don't time your purchase in Bitmine. Do just dollar cost averaging every single day, every single month, every single week. I started also very, very small, like, 7, 8, 10, 20 years ago. But you will build quite fast if you, save, you add to your position, and don't be so much focused on the negative side of the market, because the market goes in 73% of all days, it goes up. So I hope you like this video. Make sure to share it, make sure to like it, make sure to subscribe and follow me. And I see you on the other side, because the grass is greener on the other side, specifically if you join xtendaytrading.com.